everyone, welcome to Mish's Market Minute Premium. My name is Michelle Schneider. I am the Director of Trading Education Research at Market Gauge. Today is Monday, September 17th. It is the High Holy Days, so Happy New Year to those of you who are observing. So what I'd like to do today is let's just review a little bit about where the market's at, some of the concerns that started to pop up on the basis of really basically the Russell, and also take a look here at if we do get a correction, what we'd be looking for, plus some of the picks. I want to mention that Wednesday we're going to do live in the coaching. Keith and I are going to talk a lot about trading plans because I still believe that the difference between success, failure, and even mild success versus good success is having a plan. And some of you might not really understand what that means, so we're going to review that and go back a little bit in time just over the last couple of weeks on how a plan would have helped. Okay, so let's first of all, you're looking at my 1-minute charts here. You can see where my concern came in this morning with the Russell. You have the OR low here, S1 previous day low. That's why I mentioned that S1 when you had positive pivots lined up with previous day low, so it was a little bit of a concern. This one has not really gotten that close yet, nor has the diamonds, nor has the Qs. So, I often go to those smaller caps to kind of lead. It's helped me many, many times predict the next direction. But nonetheless, you have to trade the signals on the individual stocks, and that's basically what we've been doing today. In fact, this was one that came up. This is Sherwin-Williams. We'll talk about that a little bit later. Let's go stick with the indexes. So here's the Russell. Here's what I'm talking about. If you go back, scrunch this up to 2012. Let's see, scrunch this up a bit more. Here was your 2012 high at 84.66. Here was your 2011 high right here at 86.82. So actually I was going back a couple of years, which I thought was significant because the rest of them have all taken out 4-year highs, and the Qs have taken out 11-year highs. So this one was still trying to get through its 2011 high, and then on Friday we got up to 86.96, and then we closed under that 86.82. So that's really kind of what concerned me. So you can see they're already working off the RSIs. This doesn't necessarily mean we're going to take the big drop down to the 10-day moving average, but don't forget that the old 2012 highs was 84.66. So I'm going to say that as long as we hold somewhere between 84.66 and 84.25, the 10-day moving average, that would be a good correction. That's what I would be looking for. Otherwise, at these areas, I wouldn't necessarily be rushing in to buy. Of course, if we can get through that 86.82, then we'll have taken out the 2-year high, and then we can start looking at some of the more historical numbers going back 3 and 4 years. With SPY, we've already taken that out a while ago. We closed on new highs on Friday, and now we're getting digestion. This is again exactly what I'd be looking for. And the same type of situation is 144.45 were the highs when we consolidated here. So that would be my first place I'd be looking for. I called 147 pivotal because that was the old 4-year high. When I say pivotal, it just means that if it closes above, I would probably say maybe we're not quite so done. If it closes below, then I would tend to think that the Russell will be more of an indication to what happens over the next couple of days. Qs, same kind of deal. We were already on highs. Here we're getting an inside day. You can see now that if we go back to this support right here, we're talking at around 68.84. That's why I keep writing that number. Now that right now would be under the 10-day moving average, so we're just talking areas here, 68.84, 69. So you can see that I'm leaning towards this correction, but that doesn't necessarily mean we're going to get it. But if we do, those would be the numbers that I would be looking for. So once again, watch the Russell, because I think that's going to be your biggest clue right here, is if this breaks down under Friday's low and S1, then I'm going to say we're going to be looking at this correction down here at around 84.66 level. and then we can take a fresh look. Okay, looking at around, I had last week started to show you the dollar, the UUP, and I was anticipating possibly some kind of a slingshot pattern with very low RSIs after this tremendous move down, and especially since the TBTs were kind of indicating that perhaps the longer term rates were firming here in spite of the QE3 that the Fed did. So you can see we didn't get a slingshot pattern. What we need for a slingshot pattern here would have been, first of all, for it to close in the top 25% of that day's range. Instead, it had a doji. Now we're having a second inside day possible doji. I mean, that happens when you have the dollar because it doesn't have a huge ATR. So what would I be looking for? In order for this to look like some kind of a slingshot pattern, now we would have to be taking out Friday's high, which was 2167, and what I like is that you'd have a really tight risk to under Friday's low. That would be 2157. So I'm still keeping my eye on that. Whether I buy UUP directly or look at the options will depend on what the pricing of those options are versus the outright. With a 10-cent risk, I might just go right into the UUPs. But nonetheless, that is the next sort of near-term trend that I am looking for the strengthening here after it being so weak. Now, of course, TBTs, I was looking for this to go up to the 200-day moving average. We're getting an inside day. Again, you know, when you start to see these levels of digestion, that's interesting, but you've got to look at the TLTs really. And the TLTs will have resistance up to the 200-day moving average. So two things I'll be looking for, either the target price of the TBTs to take off a little bit more of that call spread that I have, or to get myself stopped out would be if the TLTs cross back over the 200-day moving average and put it back into a, well, let's see, it would be not an accumulation phase. Yes, it actually would be an accumulation phase because you can see that the 50 is actually still over the 200. This never went into a bear phase. This is in a distribution phase right now. Now, if we look at semiconductors, that's the other one. It's sitting here. It's got room down to the 200-day moving average. It's testing 33. Of course, I'd like to see 33 hold, but I wouldn't really start getting concerned now until it broke under the 200-day moving average. And some of the others, you know, I just want to see digestion, and we're starting to see that. IYR getting an inside day, XRT. Not really an inside day, but you can see starting to come off here. IBB, we've had some really nice biotech names doing well today. That's still going up. That thing never stops, really. Takes a break and then keeps going. I mean, we're looking for signs of fatigue, but I haven't seen anything. Remember, I mentioned to you on a monthly basis that the IBB, on the basis of the end of the month, only once in the last year have we seen a month close lower than the month before, and that was right here this month back in May. So if we see it again against the Bollinger Band, maybe that would be an indication. Last month's close, just so you can make a note of it, was at 136.38. So it would have to be a pretty significant sell-off to take out that particular closing price. But nonetheless, that's what we'd be looking at there. And if we take a look at XLF, that too now is getting a little bit of a correction. I like 16, but I would give it all the way down. 1571 is the 10-day moving average. It also happens to be these couple of days high right there. That's a good level to be watching. And if we just take a look at some of the other sectors, the commodity-related sectors, here's oil. Looks like it's going to try to consolidate here above the 200-day moving average. OIH. That's already made the big move. You can see we had the bullish cross here, but the price is so far away. I wouldn't be chasing it at this particular time. Same thing with XLE. I'd much rather be waiting for some kind of correction in these, but you can see they're still holding up well. And of course, gold, which now is, I mean, people will start looking at possibility of shooting stars. We haven't taken out the 2012 in this. Again, really, in terms of a sustained rally, I still do not want to see very high gold prices. And the reason being is because it still means that they're hedging against inflation, which for me does not bode well for a sustained rally, even with the QE3. Okay, let's take a look at some of the picks. Since I'm trying to look at things that have not broken out yet, that are holding up and have very low risks, especially over the next couple of days as we're looking here at the slow down with the holiday and the possibility of the corrections that I just showed you in some of the ETFs and in the indexes, buying stuff that's extended and going to new highs when the risk is far, like to the 10-day moving average, I'm going to leave out. So unless you bought Alexian, say, on Friday on the OR reversal and were willing to take it home because it closed in your favor, at this point that's not going to be my favorite. And that's the same thing when I'm looking at Onyx. Even though it was on the list, and it had a great move today, it was something that you either had to buy right away this morning. On the 30-minute, you just had to be prepared to risk to under 76, which is what I said. So you had a pretty far risk. So I'm not saying it wasn't a good trade. I put these up because I'm never really sure where they're going to go. I would have preferred to see a little bit of a consolidation over the pivot and buy closer to that 76 risk rather than buying it all the way up here. But if you got in, it's certainly acting very, very well. And just sticking with that sector, like for example REGN, doesn't look nearly as good as Onyx, but yet you can see it return to a condition 1, and yet it's nowhere near the highs yet. And if you bought this one this morning on the 5-minute or the 30-minute, I would just use that tight risk under the low of the day. I don't want to risk too much in anything right now when I start seeing signs of a correction. So that were the basic trades in the biotech area. I'm trying to see if there's anything else biotech that I had put on your sheet last night. No, I think that's actually pretty much it. Onyx, Alexian, REGN. Those were the ones that I went with. Okay, now let's take a look at some of the others. So, for example, let's take a look at Family Dollar. Now, it turns out I found out, I didn't even know, that this is actually reporting tomorrow earnings. So we're not going to do anything with this. But after earnings, this was one with the 2 inside days that I thought would be an interesting move to go one way or the other. So clearly if we get good earnings and it can take out this 50-day moving average, then it would be something that you want to look at from the long side. Also clearly is that if the earnings aren't so good and it comes in below these last several days low or under 63.60, then I would say not only would we get the test of the 200 but possibly lower. So even though I would do absolutely nothing today ahead of earnings, this is still very much on my watch list. Sherwin-Williams is having an interesting day too. It came in with positive pivots. It had a reversal against previous day low. See, there's one of the ones with a stock that has a 230 ATR. If you can buy on opening range reversals with close tight risks against previous day low, that's the type of stuff that we're going to be looking at. So the buy on the reversal would have been maybe somewhere by the time you would have gotten filled around 145.20. And then Friday's low was 144.63. You're talking about an 80-cent risk. That's a quarter of an ATR, which falls in line with our 35% risk rule for a day trade on reversals. It also is very much in line with if you wanted to do some kind of a mini swing trade. Now, of course, the 10-day moving average is legitimate too, but when we're getting this close to taking out the highs, it either has to do it or I prefer for you to have the tighter risk. Now, what else? Let's take a look at Checkpoint. There's a couple that I've been waiting to see if we can get a bigger move up. I'm sorry, Chesapeake Energy, not Checkpoint. Chesapeake Energy, you see that I'm already in this on Friday because it started to have an unconfirmed phase change. And now today, if we can close above that 200, it'll be a confirmed. So what I've done is I've put in, again, a tight stop. Now with this particular one, since it had positive pivots, I have a stop at 2023 under the low of the day. I actually added on the reversal. And so either I'll get stopped out of the whole thing at 2023, or we'll get the confirmation to the upside here over this 200-day moving average, and it'll look pretty good. Now on the monthly basis, We're still very far away from the 80 monthly moving average. So, this will be a mini swing to swing, probably a hybrid trade, because we're not talking about a stock that's in a strong trend on the monthly basis. And the same is true, by the way, with CHRW. I tried this last week. I didn't take a big hit on it at all. I took a very small hit on it. Then I didn't do anything with it on Friday because I wanted to see it clear this, and it didn't. So today what I did was I bought the breakout, because after couple of days under the pivots, it took out the pivots, but I only bought a small position. And again, my stop in this one is going to be under S1. Although you can really tighten up this stop too, by the way, and you can put it under the pivots. In fact, I think I had mentioned to you that my stop on C.H. Robinson is actually, yes, I have it under the pivots at 56.99. I'm not even going to wait for S1 because this thing either has to start to prove itself or I'm gone. Now, there's a couple of others. DVA. With DVA here, this is another one, condition 1. It was up and down against this 10-day moving average. It got back through it today. This is another one, got long on the 30-minute OR with a tight stop. My tight stop on this one, because it had negative pivots, is under R1. So I have a 99.62 stop in this one. But I'm hoping that we can get a move up to around 102, which would be giving me, first of all, my half an ATR, and then I can go to a no-loss stop and see if this thing's got more to the upside. So you can see I'm kind of mixed. I've got a couple of stocks in there that I'm anticipating from its basing action can keep on going, and a couple of stocks in there that are already acting well that I'm hoping to see a continuation but not willing to put in a tremendous amount of risk. Now, as far as other things that I would be possibly watching today, one would be Tractor Supply. Tractor Supply I liked because you can see we have a good tight risk in here. Now it hasn't done anything yet, and if we take a look at the 30-minute, you can see we've had several days, 5 days under the pivots, but still a good-looking stock, condition 2 stock. So we've cleared the pivots, but that's not enough for me. I want to see the 30-minute opening range break out too. So that's 97.85. Now that won't be over R1 or previous day high. So again, what I would do is I would buy a half a position, and to be conservative, if it doesn't close in my favor, I would get out, because you can see if it breaks these lows, there's a big risk to the downside. If it closes in my favor, since I only have half a position, I would keep it, looking to see what happens potentially tomorrow. So that's how I'm looking at these particular stocks. In terms of other picks here, I'm trying to see if there's anything else that really is exciting me right now. I know I had mentioned Tesla, but Tesla has a very high RSI, so I decided to ignore it. Apple, you got to keep your eyes on that. I know FDX was one that I put on the list, so let's take a look at FDX as well. Same group as C.H. Robinson. But you can see with this one, I was hoping for not only a breakout, but this really has to now be holding our 200-day moving average. And so we're not ready there. That's not ready, but there's been no signal. But let's look at transportation. Same thing. Look, remember I told you, actually, I said exactly what is happening here is that we probably would take out this trend line, then go back under it because our RSIs were high by the time we did it. Risk was too far. Go back under, maybe see what happens here at this 200-day moving average, and then if it can consolidate and get a good entry against that, we would do that. Otherwise, we can wait for the second test over this trend line, and then I would go in more aggressively. And a quick look at the short side. Here is Checkpoint. You can see it came in lower this morning, but it's holding the OR low. It's under the 10-day moving average. I would certainly keep my eyes on the possibility of an opening range high failure. If we get one, the opening range high failure, your risk would be against the negatively stacked floor trader pivot. And looking at the RSIs here, they're certainly not oversold. Now, this is an interesting looking stock because you had a peak low here and then a peak low there. And when the slingshot happened, of course, we've never taken out. So again, this is one of those that I would say more for a day to mini swing trade. And Cerner, which we actually did short today, which by the way just came one tick of a half an ATR, has a very different looking chart. Not to me, you don't see any kind of real slingshot pattern in here. I guess you can call this one the slingshot pattern. So what I would say is 70.37. If we get below that, this is going to continue with another leg down. If we hold that, well, then that's why I'd be playing this as a mini swing trade. I've already taken off a little piece at S1. I was looking at 70.89. For my second piece, it got to 70.90, I believe. Yep. So it's okay if it gets one tick. You can certainly cover more. Go to your no loss stop, and that's exactly what I'm planning now. Is not necessarily a no loss stop, but previous day low, which is over here, which is actually the projection. Interesting enough, R1 for tomorrow would now be my stop, and we got short around 71.70. Took a little profit. Maybe I would take another half off here close to this half an ATR target since it came within a tick, and then keep the stop in for the rest. Looking around for any other short possibilities here. ENR, well, that was last week, Friday. And you can see that's continuing. We're getting into very low RSIs, though, which is why I didn't put this on your list again. Coinstar was something we were watching last week from the short side. That's still looking dicey here. I have that up today on my watch, but it didn't give me an opening range reversal, and it hasn't given me an opening range breakdown. Whereas BBY, I actually mentioned to you, had an OR breakdown, and it already gave you a half an ATR. Of course, you got this candle right here, so this is another one where I would just play as a mini swing trade. AGN went completely the other way because today the biotech was strong. But you can see why I put it there, because it broke down under the 200, and if it continued lower, that would have been interesting. Right now, what is happening is you might get another unconfirmed phase change positive. So that's why when you're playing around these 200s, you have to watch so carefully. And the other one, which was going from a long to a short, from a long to a short, is Netflix, which has the 10-day moving average now acting as support with a slingshot pattern off the lows here, so I'm not quite sure what to do with it, but I certainly have it on my watch list going forward. And that's about it. So again, you can see the market now by the end of this video is down 32. I have my stops in, so if I lose money, it's going to be in a very controlled fashion. Also with the ones that I showed you I got into that had a clear pivots. I did not buy a lot, only half of positions. Checkpoint is the one that I'm in the most, and even that has a controlled. CHK, I keep saying Checkpoint, sorry, Chesapeake Bay keeps correcting me, is the only one that I've added to today, and in the meanwhile, Chesapeake Energy. And that's it. So, just a good time to keep everything on the light. Tomorrow should also be a relatively quiet day, the second day of the holiday, and then I'll see you guys, well, I'll do another video tomorrow, but then I'll see you guys for the live coaching. So anything you may want me to cover, good time to start sending me in some topics. Okay, that's it for now. You all have a great trading afternoon. Happy trading, and bye for now.